So we've seen a bounce in Bitcoin where you have some people starting to call, okay, the 17,500 level on Bitcoin was the low. And then you have other people still saying, oh, well, I still think there's more downside. Like myself, the charts still tell me there's more downside, but you're not seeing an overwhelmingly crazy amount of bearish, hysterical sentiment, which to me is an indicator that we haven't fully bottomed yet. You have to get to a point, whether it's the stock market, commodities, or crypto, you have to get to that crazy state of panic, of absolute insanity, fear, for it to finally bottom out. And we just haven't seen that in crypto yet.
Hello guys, and welcome to another video of Crypto Money Talk. So you guys saw that Gareth still believes that the bottom is not in yet, even after falling again to 18K. His analysis says that we are far from the bottom, so let's ask him when he feels we are going to have our bottom to finally start another bull market. But before we move further, it is important to note that we are not financial advisors, and everything in this video is not financial advice, but merely a lesson for educational purposes. Now, let's ask Gareth when we will hit the bottom.
One of the things you want to look for is you want to look for people that are just throwing in the towel because it's too painful, right? So certainly coming down to 20,000, you had some of that, and even piercing 20,000 on Bitcoin. But you didn't get people saying, you know what, Bitcoin's not going to be around anymore. It's going away. It's going to fail. You need to see that type of fear come in where people that were long at 68, 69,000 now are saying, oh, it's a goner. It's not going to survive. That's where the low will be put in when you get that absolute kind of crazed, kind of irrational panic. Just like it was irrational at the highs, you look for that irrationality at the lows as well.
And this was all about Gareth's belief on us not having hit the bottom yet. Before moving forward to ask more questions from Gareth, let's quickly go through what is happening in the market. The biggest Bitcoin fund recently achieved a record negative 35% discount. And this is a warning for the price of Bitcoin? Maybe. This is the first piece of news we'll talk about. In other words, Grayscale Bitcoin Trust, a cryptocurrency fund that currently holds 3.12% of the total Bitcoin supply, or over 640,000 BTC, is trading at a record discount compared to the value of its underlying assets. Institutional interest in the fund is continuing to decline 10 months into the cryptocurrency bear market. Despite charging a 2% yearly administration fee, GBTC has long offered investors a great choice to enter the Bitcoin market. This is partly because institutional investors find it simpler to keep GBTC. GBTC traded throughout most of its existence at a significant premium to spot Bitcoin pricing. But after the first North American Bitcoin exchange-traded fund launched in Canada in February 2021, it began trading at a discount. The Grayscale Bitcoin Trust lacks a redemption mechanism, unlike an ETF. To put it another way, GBTC shares cannot be created or destroyed based on changing demand, which accounts for their steep discounts compared to spot Bitcoin. After receiving a refusal from the Securities and Exchange Commission, or SEC, in June, Grayscale's attempts to convert its trust into an ETF were unsuccessful. Theoretically, the SEC's clearance might have caused GBTC's discount to be reset from its present levels to zero, generating returns for investors who bought the shares at a discount. When Grayscale's ETF application was denied, the SEC was sued. But in reality, it might take years for the court to rule, so investors would still be trapped with their discounted GBTC shares, whose value has dropped by more than 80% from its peak of over $55 in November 2021. Furthermore, let's move on and ask Gareth about Fed rates and what he feels about it, and how this is going to affect the market.
I think the dollar has a few things working towards it, or working for it. Number one, the Federal Reserve has talked the most hawkish game. We saw Jackson Hole's comments from Jerome Powell. We've seen, him coming out continually and just being super, super hawkish. We're going to raise interest rates as much as we need to. And what that does is it strengthens the dollar, because as expectations for higher interest rates, so basically when interest rates go up, it draws money out of the economy, right? So it sucks money out, so you have less dollars in the economy to be invested or to just in general be used, and that creates it's a supply-demand basic mentality of less dollars and equal demand means the price of the dollar must go up. Then you also have the scenarios where you have the risk of Russia with Ukraine, these global geopolitical issues, which historically have had investors rushing into the dollar for safety. So there's that added aspect as well. And then you also have the kind of the economic aspects, where we know that Europe is struggling, their economy is likely going into recession. We have other areas of the world, maybe the whole world, heading towards a global recession. And same thing, it makes people want to buy the dollar for safety. So, you know, everyone talked, and this is crazy because in 2021, it was all about the demise of the dollar. The dollar's going to collapse. That's why Bitcoin's going to keep going to 100 to 200 to 300, right? 1,000, obviously. But in reality, the dollar has been the best performing asset out there, in spite of all that chatter. And again, that's just basically because the dollar is still king on the block. You know, you have yen, they're printing just as much, if not more. Europe is the same thing. The dollar is still the reserve currency of the world.
But Gareth, what does that mean for Bitcoin?
Eventually, I do think Bitcoin becomes a stable store of money, of a way to diversify out of fiat currencies, right? But we just have to recognize, if anything, I would say it's the princess, right? It's super young. What is it, 2022? So you have a 13-year-old that eventually will grow into the queen or the king, but it's just too immature at this point. You just got to give it time. It will grow.
But Gareth, as we know, Ethereum has now merged. Where do you see ETH? And will all of this affect Ethereum too?
Over the last month, and it's kind of pulled back a little bit. I do think that if the merge goes smoothly, you may see kind of a relief, right? And I think the whole crypto sector is kind of a little nervous here too, is because if somehow it gets messed up, that would be bad for the whole crypto sector. I think it will go smoothly. I think that's why they delayed it so long, to make sure it goes smoothly. And so I think afterwards you see a very short-lived kind of sigh of relief. And then I think all eyes start turning back to risk assets. What's the Fed doing? What's the dollar doing? What's the global economy doing? And that will be in control again. So I think this is kind of a narrative changer just in the short term. But I think, again, eventually after it, you'll see a resumption of whatever risk assets are doing, crypto as a whole is going to do.
Furthermore, talking about Ethereum, there is another discussion that ETH supply slowed after the upgrade. Will it ever trigger growth? Since the day of the merge, there are now more than 7,000 ETH in circulation. This quantity is, however, less than it may have been if the proof of work consensus method had been in place. Additionally, the amount is much less than the 6.25 coins per 10 minutes that make up the BTC supply. However, ETH might still have a long way to go before it starts to deflate, even with the lower supply. According to analysts, ETH can become deflationary when the tokens from block subsidies are less than the ones burned, which is what will make it a deflationary asset. ETH becomes a deflationary asset if more individuals start using it for transactions than are staking it. Experts also agree that for the cryptocurrency to remain deflationary, the transaction fee right now needs to be 15 GWEI or 0.000000015 ETH. However, these circumstances do not exist yet. For instance, the typical transaction fees for Ethereum is 11 GWEI. Additionally, staking produces more tokens than burning them. At the moment, staking levels would bring the annual token supply of ETH to 603,000. On the other hand, just 412,000 ETH will be burned annually. Therefore, the difference equals 191,000 ETH or 0.16% in yearly inflation. So that was all about Gareth's views about crypto bottom and what's happening around the market. So what do you guys think of all this? Give this video a thumbs up if you found it helpful, and be sure to subscribe to our channel for more content like this. I'll see you in the following video. Until then, goodbye.